And I know that you are probably still new to tax class. We've treated some topics under tax, which I will still go over a few with you. Okay, because you are just joining us. I think this is your first taxation class, right?
Yes, sir.
Okay, so just remind me so that I will go over some things for you. Okay. So, and I think you told me that all your classes will be online, right?
Yes, sir.
Okay. So, you can enter my DM and let me know. Just remind me so that I will not forget. So,
Okay, thank you, sir.
let's go into what we have today. I'm not supposed to start from chapter 19, but this topic here is very short. And looking at my time, I'm about 3%. I think that's the topic I can cover for tonight. Okay, so the topic says treatment of losses. It's the same thing as what you call loss relief. Loss relief. Now, just try to follow me. If you have any question, let me know. Just ask. Okay. Now,
So,
before now, when we treated chapter one, we talked about the things that we can tax. That means our tax base. And one of the things that we can tax is income and profit of either individual or companies, right?
yes,
But
sir.
the question I will now ask is that what if this individual or company does not make profit? What if it was loss they made? Will you still tax the loss? So that's the big question. The big question is no, you cannot tax a loss. You can only tax profit or income. So that's what brings us to what you call treatment of loss or loss relief. So since they cannot tax loss, what they will now do is that they will give a relief on loss. So relief is like something that will ease the burden of taxation. So because they have made loss. And you know what your loss means? Let me quickly define it. So your loss is when your allowable expenses, I'm sorry, when your allowable expenses is more than the total income, earnings, or gross profit. When your allowable expenses is greater than the total income, earnings, or gross profit. I'm going to explain. In taxation, we have what you call allowable expenses and disallowable. Allowable and disallowable. So allowable expenses are expenses that tax authority can allow you to deduct. You know that when you are doing your financial accounting, when you after you get your gross profit, or you can call it operating profit, then you now less the expenses like depreciation, salaries, rent, your administrative expenses, your finance cost, and all of those things, right?
Yes,
So,
sir.
but in taxation, you have your allowable expenses and your disallowable. That one is not for this class, but we still learn what disallowable expenses are and what allowable expenses are. Okay. So now for something to be called a loss, it must be that the allowable expenses according to tax authority and tax laws exceed your total income. Don't forget, for you to get your profit, your income will be more than what your expenses. But
Yes,
when
sir.
your expenses is more than your income, that's when you have loss. So when a situation like that happen, the company will enjoy what you call a loss relief. What you call a loss relief. So that's the first thing, that's the introduction. So we have two types of loss relief. Has anybody joined the game?
No, sir.
I don't think so. I think it's only two of us, right?
Yes,
Okay.
sir.
So we have types of loss relief. We have current year loss relief and carried forward loss relief. So let me explain the two to you. You can jot down. I may not choose to jot down. I'll still send it to you as summary. The first one, current year loss relief. When they say current year loss relief, the first thing is that it is applicable to only individuals, not company. It is applicable only to individuals. That's one. That's one. Number two, it is based on AYB. It is based on AYB. So what do we mean by AYB? AYB means actual year basis. In taxation, we have AYB and PYB. AYB is actual year basis. PYB is prior year basis or preceding year basis. Okay. So in a current year loss relief, they use AYB. So which means that the loss for that year can be relieved against the profits from another source. I'm going to explain that to you better. Understand? So when you say AYB, which means actual year basis, that means whatever you want to do will be in that year. Now, what is loss relief? Loss relief is you are relieving the company that made loss. Now, how do you relieve a company that made loss? Now, the way you do that is whenever the company now makes profit, instead of you to tax the profit, you first minus the previous loss that they've made. Understand? So
Yes,
the
sir.
remaining money that will now remain in the profit, which is small, will now be what to be taxed. So in a current year loss relief that they are using an actual year basis, so a company or an individual, because it's an individual that enjoys current year loss relief, if an individual have like three sources of income, so you understand, and let's say out of the three sources or three businesses that he has, he made loss in business A. So because it's an actual year basis, he can relieve the loss. Let's say he made 450 loss, 450 million loss. So he can relieve that 450 million loss in business A from the profit he made in business C. Okay.
Yes,
And
sir.
that's another thing that is peculiar to current year loss relief. In a current year loss relief, loss made in a source of business can be relieved against the profit of another source. Understand? But it
Yes, sir.
must be but it must be within that year new. It must be within that year new. If it is another year, you cannot leave it against this the source of another income. You have to leave it against the source of its own income. So what am I trying to say? So for example, now if you did not relieve that 450 million loss from business C in let's say in 2020, let's say you made loss in 2020 and you did not relieve the loss from the business C and you will now enter 2021. You cannot do that in 2021. So what you will do in 2021 is that that 450 million loss will be relieved against the profit he made in business A again in 2021. Okay, so don't get that wrong. That is for that. So the major thing about current year loss relief is first of all, it is applicable to only individual. Number two, it is based on AYB. Number three, the losses from the source of business against another source, Abi. Then
Yes, sir.
the fourth one is that there must be a written claim. Yes. So it is not enjoyed automatically. It is not enjoyed automatically. You have to write to the tax authority that they should give you loss relief within the 12 months of making that loss. Within 12 months that you make that loss, you must write to the tax authority that you want to enjoy loss relief before they give you. That is for current year loss relief. Please don't forget, all this thing I'm saying is for current year loss relief. Okay.
Yes, sir.
So I've mentioned 4 points. Then the last point is that losses can only be carried forward for maximum of 4 years. Okay.
Yes, sir.
So how many points is that? I think I've given 5 points.
5 points. Yes, sir.
So the first one is applicable to only individual, right? Then the
Yes.
second one is AYD. Then the third
Yeah.
one is source loss made from a source of business can also be given against another source of business, source of
Yes.
income.
Yeah.
And I said it must be a written claim. And I
Yeah.
said losses cannot be carried forward for more than
For
4 years.
years.
After the fourth year, it will become lapse. Okay.
Yes, sir.
Were you jotting? Are you jotting?
Yeah. Yes, sir.
Okay. Sorry. So the second one is carry forward loss relief. There are two different things. It is the opposite of current year loss relief. Okay.
Yes, sir.
So sorry. So carry forward. Sorry. I'm so sorry. I'm trying to do this thing. So carry forward loss relief, unlike current year loss relief, applies to both individual and companies. Don't forget, current year loss relief, I said it applies to only individual. Carried forward relief applies to both individual and companies. Okay, so that's the first thing. Second thing is that carried forward loss relief uses PYB, not AYB. So for carried forward loss relief, you cannot relieve your loss in the year that you made it. You have to relieve it in the next year. Whereby, and the next year is not like mandatory. If you make profit in the next year. Now let me explain it. If God forbid I make loss this year for 45 million, understand? That 45 million in normal day, I'm supposed to believe it against the profit of next year, which is 2027, right?
Yes,
So
sir.
God forbid, oh, my enemy now made another loss again in 2027, which means I cannot relieve it, right?
Yes, sir.
So I will now go again to 2018. That's the meaning of carried forward. You can still push it forward until when you see profit. When you now see that profit, you now remove all the loss from the profit. But one of the things that will happen is that the loss will accumulate. You'll be adding it together, adding it together. So when there is a profit, you will remove it from the profit. Okay.
Yes,
So
sir.
that's for five for loss with using PYB. Then the third point is that for a carried forward loss relief, the loss from a source of income cannot be relieved against another source. The loss from a source of income cannot be relieved against another one. Are we there?
Yes, sir.
So I've given you three, right? Abi?
Yes, sir. Three.
So the fourth one is that there is no written claim. There is no written claim. It is automatic. It is automatic. So you don't need to be writing that, please now give me loss relief. So what's the next that's four, right? Let me give you one more so that to balance because sometimes in exam they'll tell you that you should you should differentiate. Okay, so the last one, what did I call the last one for current year loss relief? The last point.
Um, Losses can only be carried out for maximum of 4 years.
Yes. Now, if you remember now, this carried forward loss relief, I said this can be enjoyed by both company and what and
An individual.
for the individual, it can be carried forward unlimited for unlimited number of years. It can be carried forward for unlimited number of years for individual, but for companies or corporate body. So what am I saying? That was a mistake. I'm so sorry. It's companies I wanted to say. For companies, it can be carried forward for unlimited number of years. But for individuals, it can only be carried forward for 4 years. 4 years. So what it means is that if you carry it forward in 2020, they still made loss in 2021. You carry it forward in 2021, they still made loss in 2022. Carry it forward again, they still made 23. You carry it forward again. By the time that 4 year elapse, that loss will be lost. What we mean by loss is that you will not be able to relieve the loss again. That's what they mean by the loss will be lost. So for individual is 4, for company is unlimited. So that's the last point on that I carried told us. So I think with that you can differentiate between the two of them. Abina.
Yes, sir.
Oh, good. I think someone else joined. Who are the latecomers in this class? Abisoye, good evening. How's work?
Good evening, sir.
How is work?
Okay, it's fine. No.
Okay. Please let's discuss. I want to really finish this one tonight.
And please, what class are we doing today? Is it taxation?
Yeah, this is tax. This is taxation class.
Chapter what? Chapter 3.
No, this is actually chapter 19 because it's the shortest. This is the shortest topic in taxation, and I want to really finish it within 30 to 40
Okay.
minutes. That's why I picked this topic. Okay, and we're even almost done. In the next 20 minutes, we
That's
should be done
lost
with this
relief.
class. Yeah, that's loss relief. Okay, please. So can we continue now? Okay. So now we have rules on loss relief. Rules on loss relief. So the first one is that trading loss to be deducted from the attributable profit of an assessment year shall not exceed the actual loss incurred by the company in the previous assessment year. So what we are trying to say now is, for example, now let's say the company made loss of 20 million. They now made profit in the next year and they now want to relieve the loss. The loss that they can relieve alone is that 20 million. They cannot say, ah, let's just relieve 23 million. That's what the first point is saying. It shall not exceed the actual loss incurred by the company. You understand? So it cannot exceed outside that. And the loss have to relate to um and allowable expenses. I already said that in the introduction, and it must pass the rent test. So don't worry, we'll still talk about what the rent test means. Only reasonably, exclusively, and necessarily. Okay. And the next one is that losses are not aggregated with accessible profits in the computation of a company's total profit in strict compliance with the provision of Section 31 of Section 1 of CETA. So what they are trying to say there is that in the computation of the accessible profit, you still learn that under how to prepare a company income tax. You still learn that. So when you are trying to calculate your accessible profit, you don't join the loss in the accessible profit. This is after you have gotten your accessible profit, you will now relieve loss. After you have gotten your accessible profit, that you now relieve loss, not that you use it in the computation of accessible profit. This hope you are getting it. Don't worry, you still learn how to do your accessible profit when we get to company income tax. You learn all those ones, but that's not for today's class. Okay. So consequently, a trading loss from one of the company's source of profits cannot be set off against profits from another source. Yes, we have actually talked about this one too, that for companies it is not possible. But for current year loss relief, they can do that in the year that loss was made. Okay. So the next one is that when losses incurred in two different assessment years being carried forward against the future profits, the first loss incurred will be relieved in priority to the subsequent loss. So this third point is straightforward. What the third point is saying is that, for example, in 2021, the company made 20 million loss. In 2022 again, please you can try to mute because of background noise. So let's say, for example, in 2021, the company made loss of 20 million. In 2022, the company made another loss of 10 million. That's 30 million. So let's say in 2023, the company now made profit. The first loss that you relieve is that 20 million of the 2021. That's the first loss that you relieve. Not that you first start with the 10 million. No, you start with the first loss that was incurred. Okay, so that's the rule. Then after you have now finished relieving the first loss, you now relieve the second loss. Okay, taxation is mostly about rules. Try to understand the rules. Okay, the second one is that when trade ceases, any terminal loss resulting therefrom which could not be relieved in the year of cessation due to insufficiency or non-availability of profit is deemed lost. Let me quickly explain this one too. Now, if the company ceases, the company is no longer trading. In short form, the company liquidated, right? The company shuts down. If there was any loss relief that the company did not enjoy, if there was any loss that the company was not relieved of, as at the time of that cessation, the loss is lost. Like they cannot redeem it, they cannot enjoy it again. That's what they are trying to say here. Unlike capital allowance, you still learn it. For those that were in class last 2 weeks, Saturday, yes. No, last 3 weeks Saturday, when we did capital allowance, they will understand what I'm trying to say. Because if it was capital allowance, even after the company shuts down, you can still enjoy your capital allowance. You understand? So you do carry back capital allowance. But for loss, if let's say before the company shuts down now, the company has made loss for the past 5 years. Once the company is seizing, all those loss cannot be enjoyed again. It's deemed lost. Okay. So that's for that point. That's for that point E. Then the point E, there is no provision
Please, I
under the
can't see your
Nigerian.
screen. No,
You can't see my screen. Who can see my
I can't see
screen?
your screen, please.
Who is that? Okay, okay. Let me check again. You are just joining. Can you see it now? Hmm? Let me know. Can you see it now?
No,
Eh?
no, no. Yes, I
Can
can
I see?
see it. Yes,
Okay.
yes.
Okay. Okay. I've talked about carried back, Abby. Which point are we now? I said there is no carried back, Abby.
Yes, ma'am.
Yeah. So the point D and the point E is actually almost the same thing. The point E also says there is no provision at the Nigerian tax system for carried back of terminal losses. Yes, it's still the same point that I'm talking about there. Then F says a claim for relief takes precedence over the claim of capital allowance. Yes, I think I've said this in class before. I've said this in class before for those that were around. When you get your civil, I know, yes, I know that I've not done company income tax. So some of this I'm saying you may not really have a picture of it, but I just wanted to understand what I'm explaining. When you get your assessable profit, okay, after you get your assessable profit, the first thing you do after that your assessable profit is you relieve your loss. After you relieve your loss, you now enjoy your capital allowance. Okay, so that's what they are trying to say here, that loss relief will first take precedence before capital allowance. So don't do that mistake. Don't do that mistake. Accessible profit, loss relief, then capital allowance next. Now we are going to see an example here, illustration 19. Now, let me really tell you this. You see this topic, loss relief, most times they will not ask it separately, they will ask it with company income tax. Okay, they will join it with other things, so it will not stand alone. So most times when they ask it, the things that they ask about it is they can ask you for these rules that we just talked about, or they can ask you that what is the difference between current year loss relief and carried forward loss relief. That's another thing they can ask you. So, or they ask you in relation to company income tax, like this illustration. So that's just the three ways they can ask lots of living exam. It's not really a big or stressful topic like that. So you don't need to stress yourself for this one. But it's just like a bonus topic, okay? So let's just quickly go through this topic, then we are done because after this illustration now, there's nothing here again. See now, this last one is chapter review and we are done with the topic. So that's why I said it is very short. The topic is very short. And that's why I picked it because of my battery percent. It will not last long. So they said Post 2 Nigeria Limited has been sustaining losses for many years, but made a good recovery in 2017. The adjusted result of the company for the following year are as follows. So you have all this year and year and year and year. And for those that were in class when we we're doing basis of assessment, you will know what this one is about. Okay, please, you guys should try to just go through this question. I'll give you like 1 minute or 2 minutes. Just go through the question, and I'm going to join you back now. Just 1 or 2 minutes, please. Then I'm going to. There's a reason why I say that because I'm going to ask you a question. Just go through the. Just go through it. If you have any question, ask me. Okay. Oh, I'm so sorry. I've taken away from question. Sorry, give me 1 minute. ATS2 want to start class. I want to record open recording for them. Please give me 1 minute. 1 minute so that I'll be able to. Okay. So um I'm sorry. It's only my email account that can't actually record. So the tutor is actually asking for permission to record that class. That's why I had to quickly do that. So now this is where we are. Consulted as sustaining loss for many years, but made a good recovery in 2017. Adjusted results for the company for the following year as follows. So if you check 2012 is loss, 2013 loss, 2014 loss, 2015 loss, 2016 then they made profit, and 2017 they made profit. Now the first thing that you first look at as a student, please be cautious of information. What is this? This is Pursue Nigeria Limited. So it means that what we are talking about is a company. This is Nigeria Limited. Don't just look at the name. Don't say some people look at the name and say, oh, this is individual. No, this is a company. And don't forget, it's not the same way you treat individual, you treat company. Individual laws can only be carried forward for 4 years. Company is unlimited. So your interpretation matters. So Pursue Nigeria Limited is a company. And then we have all this now. We also have your capital allowance. You also have a capital allowance. Okay. Sorry. I'm trying to. So now look at the requirements. Be careful of the requirements too. For those in class, I used to tell you about that. See what they say you should do. Complete the company tax liability for 2013-2016 year of assessment. Ignore minimum tax provision. I know in your mind you'll be saying, what's minimum tax provision? You learn it when you get when we are doing company income tax. Okay, so all those one is related to company income. We'll talk about that. So first of all, those that were around when we did basis of assessment. You know that I told you that we have a normal basis and we have abnormal basis. And I said in our abnormal basis, is either when the company is commencing the season or there's change in accounting date. So first of all, you look at this scenario. In this scenario is related to a company which is close to Nigeria Limited. And again, if you look at this scenario does not relate to a commencement. Neither did it relate to um, a change in account date, no cessation. So it means that this scenario, as we are saying it, is a normal basis. It's a normal basis. So that means there's no operation, there's no need for any rules. It's just straight to the point. Now, don't forget what I told you that you prepare this based on PYB, this prior year basis or preceding year basis. So it means that let's say for example now we want to do for year 2013, the statement that we are using to assess the tax liability will be the statement of 2012. So let me show you how that would be. So let me go to my insert tab. So I'll put the currency. So we are in Nigeria. I using Naira. And please be careful of the question what's it called? You answer so that you're not going to be answering Ghana question. It is Nigeria. Don't forget it's ATS I are doing. So there are some questions there that belongs to Ghana. Okay, so we have our Naira sign. Please, all these things are important and they have their marks. The name of the company, the title of what you are doing, your Naira sign, then uh, details of what you want to do. So the first one is 2013. We're starting from 2013 year of assessment. So you just write, you can just shorten it by writing YUA, or you may choose not to even write anything. But it's nice if you just write assessment here or YA. Our assessment here is to make this thing longer. Okay, let me start from here. 2013. So the basis period, don't forget that is from 2013 year start. So the basis period I will use will be the basis period of last year. Don't forget this is PYB that we are using, not AYB. Okay. So that's 1112 um, 31st December 12. So this is PYB like this. Yeah, this is PYB like this. So that's 1st of January to 31st of December. So that's a 12 months complete. Don't forget this is a normal basis. There's no rules, no nothing. So the first thing, so if you are using this date, 1st to 31st, so it means it is for year ended. So when you come here, this is year ended to December 31st, 12, right? If you start something from January to December or within any 12 month period, that's the year ended, which is 12 months complete. So if this is 12 months complete, this year end, which is year end to 31st December 2012, is what we are going to use here. And in this space now, they make loss of 350,000, 350,000, yes. So just come here, write loss for the year. For the year. I'm shorting something too. It's FCY, it's still the same thing, loss for the year. So that's like 350,000. Then after that, you also have, you can put this into brackets because um it is negative. Then you also have capital allowance. There are two ways we can do it. I want to see if I should add it or I should leave it. So I'm coming. So this is one way you can do it. There's also another way you can do it. I'm going to tell you that one later. capital allowance, so which is the capital allowance for 2013 is 25,000. For those that were in class when we are doing capital allowance, we learned that in capital allowance it is based on AYB. Okay, capital allowance is based on AYB. The reason why I remove that minus is because of the capital allowance. Let me just leave it like that. Because I want to add two of them together. So the capital allowance is always on AYB. So the capital allowance for 2013 year of assessment is the one that will be used, not the one for 2012. When you are in this place, this one now, you can use your PYB when you are doing your basis period for your profits or your loss. But when you get to your capital allowances, you use AYB. Okay. The reason being that when before you got all these figures here, you've already used PYB before, so you cannot use PYB again. Understand? So for those that were not in class when we did the capital allowance, don't worry, we'll go through it again. So you know the reason why we are using this 25 exactly, which is for 2013. So I think that's all for year 2013 year of assessment. So, so this will now be, if you add this together, that's 375,000. So this is unrelieved loss and capital allowance. Capital allowance. Some people will say unrecouped or unrelieved, any one out of the two that I want to go for. So we are done with 2013 year of assessment. So the next one will be 2014. 2014. So just copy and paste or change this one. So this one will be 13 also. So the next one is now you have before you start. Now let's look at this. Let's look at this. Yeah, what's it called? This 2014 year of assessment. The basis period is from 1st January to 31st of December of 2013, which is this one, this other one, right? Which is this one. So they made another loss. So you now write, you start from loss for the year. Okay. Was actually doing it before. I did not know that I did not record, or maybe the recording stopped. No. So I think from year I've explained year before. I said all of these things they are marks. So you write the name of the company, what you are doing, computation of tax liability, the assessment here. And I told you that this one is based on PYB. So we are starting from 2013 year of assessment. So in 2013 year of assessment, the financial record that we are going to use, or the financial statement we are using, is the one for previous year, which is 2012. So you are using from 1st of January to 31st December of last year, which is this first record, year ended 31st December 2012. They made a loss of 350,000. That's how we have 350,000 here. Then we also use the capital allowance. So the capital allowance, I said it is based on AYB. So that means the 2013 year, the figure of 2013 is what you still use in 2013, not that you can use another figure. So capital allowance, which is 2013, 25,000, is what will still come back here. Then when you add it to, you have your own relief loss and capital allowance. Then when you get 2014, loss for the year, which is 250,000. This is it, 250,000, right? Then your unrelieved loss, 350,000. The unrelieved loss is the loss of last year that you have not relieved. This 350,000 was come back here. So when you add it, this is it. Then the capital allowance for the year is 37,500. The unrecouped capital allowance is the one for last year, which has not been relieved. So you bring down one also. Then when you add these two together, should give us, sorry, equals to sum. That's 62,500. So 62,500. Then when you add the two together, I should give you unrelieved loss and capital allowance. Yeah. So everything is, no, this is not correct. This is not correct. I'm coming. This is not correct. This should be 6 million. Sorry, this should be 662,000. Yeah, 662,500. Not, sometimes Excel can, if you did not input the formula well, can do his own stuff. Okay, so we are done for 2014. Next one is 2015. So instead of us going to stressing ourselves, let me just copy the all of this. I'll bring it back here. I'll just change one or two. So let me zoom this. Hmm. So for 2015 now, I'm going to change this ones. This should be 15. This will be 14. This also be 14. So all these figures will change. All these figures to change. So loss for the year in 2014, that's 457,000. 457,000. Unrelieved loss, which is now this unrelieved loss will now be, is this 600 that you now use. Don't forget, in 2013, it did not relieve 350. In 2014, you did not relieve another extra 250 again. So that means all the losses that you have not relieved altogether is what? Is 600,000. So it's the 600,000 that is coming here, 600,000 naira. So that's our unrelieved loss, 600,000. Then your capital allowance for the year is 32,000. So this is 2015. 2015, that's 32,000. 32,000. So this is 32,000. Then your unrecouped capital allowance will be the addition of these two, which is 62,500. So that's 62,500. So then let me see if this formula can work. Yeah, yeah, it worked. That should give us 94,500. Good. So this one will give us, this one should give us 1,057,000. Um, sorry. So this should give us, let me increase this. Yeah, 1,057,000. Then if I add these two together, let's see, let me use the formula now so that to be correct. So everything should give us 1,151,500 at year 2015. So this is the thing that I have not yet recouped. So don't forget, according to our question, I just supposed to do for 2013 to 2016 year of assessment. Okay. So now we have done 2013, 2014, and 2015. Abi? So let's do 2016. Let's do 2016, which is the last one that they want us to do. So 2016 now. So 2016 will be This should be 6. So all these ones to be changed to 5. This one to be changed to 5. Then let me delete all of this. Then this and this also. So loss for the year 20, that's for 15 now. That's 57,000. 57,000. Sorry, is it 75,000? So that's 75,000. Then only leave loss for what are the only leave loss? That's from now 1,057,000. 1,057,000. So the addition of both is 1,132,000. Capital allowance for the year. This is 2016, so that's 45,000. Then when we put capital allowance, that's the addition of everything that we've not yet relieved. That's 94,500. So let me use this formula again and let us see how well it work. Yeah, so that's correct. So okay, so let's use the formula here also. Let's see if it work here. I think this is correct. Yes, yes, this is correct also. So for 2016, this is the whole figure that we have not relieved for both loss and capital allowance. Now, this is everything they expect you to do on a normal day. 2013, 2014, 2015, 2016. Now, for explanation purpose, let me do 2017. The reason why I want to do here 2017 is because I want to show you how you will do it if there is a profit. And if you look at this place now, the next year there was a profit. There was a profit. So the question is now, okay, what if there is a profit? So what will I do? So this is what you will do. Okay, so I'm coming. The Google Meet thought I was not in the. So let me reshare. Okay, it's still sharing. Sharing. Okay, okay, yeah, it's still sharing. So yeah, 2017 now. Yeah, 2017. So 2017 will be 17. Then all of this should be 16. This should be 16. And this should be 16. So in year 2017 now you have now you now have profit. Profit instead of loss now. So you have profit here. So profit for the year, which is how much? 79,000. Good. So you now start removing your loss. Don't forget all the loss. See all the loss that they want to relieve. 1,132,000 and you only have profit of 79. So according to the rule, the first rule is that I cannot relieve loss beyond the profit you made. So the loss that you can relieve is subjected to what? To 79,000. So this will now be 79,000. So once you relieve this 79,000 from this one now, what's it done? So that means you are not subjected to any tax for that year. Okay. So let me just even balance. Let me close this off. Okay, don't let me use that. Let me use this feature here. So which means that now you have closed the account off. So you now write unrelieved loss. The unrelieved loss is ìjọba mi sọ wọn fún one class. Unrelieved loss means now if you remove 79 million from if you remove 79 million from 1 million from this from 1,132,000 from 1,132,000, what would that give us? Sorry, let me quickly do this. Maybe I should be 5 minutes. So that's 79 minus 1,132,000. So that's 1,053,000. So the unrelieved loss is what? Is 1,053,000. Okay. So we are done with that one. So the capital allowance, do we have capital allowance for the year? We don't have capital allowance for the year. So the only thing that we have is unrecouped. Let me just copy this one back. Control C. So unrecouped capital allowance, which is how much? 139,500. 139,500. So if we add these two together, this will give us 1,192,000. That's reduced. Why? From 1,271 to 1,192. Why did it reduce? Because you have relieved some of the losses. So that's how you will do it. You understand? You understand? That's how you do it. So when you have so for example now, if you now want to do 2017 now, if you now want to do 2017, 2018 year of assessment, which you are going to use 2017, this is 450,000. The first thing you first relieve is this loss, this 1 million loss. So after you relieve down, if all the loss have not finished, that's when you can now start relieving your capital allowance. You understand? So that's how you do everything, and that's all for this question. So thank you very much. I have to end this now because of time, and I want to attend to that. So thank you very much. Please watch and get back to me. Thanks.